I think that silver could end up being in three digits. It could end up being several times higher than people anticipate that it ever has been. And its relationship to gold could change in terms of the silver-gold ratio. So all of these things are in play to make it almost a mirror image from a concept standpoint of what palladium did in relationship to platinum and in relationship to market expectations. First of all, silver, it's a Janus metal. It's considered monetary and industrial, but historically, most of the demand for silver has come from industry. And what has caused changes, large changes in silver over time, has been when investors take more of an interest in it than they did in the past, and they tend to have that change happening on the margins. And so the margins where people buy more investment silver is what causes it to rise sharply. And that's what's happened, several times in the past, but it's still mostly an industrial metal. However, and I could be wrong on this, but I believe that last year, 50% of the silver that was purchased was for monetary reasons. In other words, investment reasons. So if that's the case, about half and half of the silver went to industrial versus investment. And investment is set to become an even larger percentage than it was last year, I believe, in that regard. And so now we're seeing it as a monetary metal. And the thing is, the industrial users are going to have to come in scrambling down the line if we end up with the type of deficit that I think we're looking at over the next 2 or 3 years. So let's move forward to what you mentioned about what would it be like, what would things be like if silver was $100? This wouldn't be something like people say, I wouldn't want to live in $5,000 gold because we'd have a societal collapse. I don't think that would be the case. You could have $10,000 or $15,000 gold and you wouldn't necessarily be having Mad Max. You would simply be having high inflation. You would have a very weak dollar, which leads to high inflation, and you would have more emphasis on the possibility of reinstating gold and perhaps silver as monetary metals, not necessarily in your pocket, but part of a group of metals that would be maybe supplant the dollar as a reserve currency, so to speak. So that we don't know what that world would look like, but I don't think it would necessarily be one that's hard to live in per se. But the problem is we have all sorts of political issues and divides, and we have economic deficits and things like this. So those things all influence the mix of which silver is a fish swimming in that sea. So to break out silver and say it's responsible for such and such, it's impossible to do, but it is a factor. And because people watch the price of silver like they do gold, not only you and I watch it, but the authorities do. And when they see it, quote, getting out of hand, they want to bring it back down so that people don't spend so much time looking at it. I think there are just a lot of different actors out there that are all doing their own thing, and it's difficult to sort out the why. What Mr. Market tends to do is to give us the answers later. So if people are waiting for the answers before they act, I think that they're waiting too long. They should follow their plan regardless of what seems to be happening right now. But as I thought about the palladium platinum experience, and I thought about the silver gold ratio, I started to see that the picture for silver could be bigger in terms of a price rise, at least a spike, and then a higher normal level price than most of us have really thought possible. Not just $100 silver, but multiples above that, at least for a period of time. And if you look at the silver-gold ratio, it's tended to, for many years, it's tended to be essentially between 40 and 70. I know it goes up to 75 or 80, and it goes down to 30 or 20 or 15, like it did for one day in 1980. You could think of 40 to 70 or 75 gold-silver ratio to be like those Bollinger Bands. Most of the time, it's contained within that. So we could have a situation where silver goes up into three digits, and we believe the case for gold is still stronger, even if it's blunted a little bit by Bitcoin. And so instead of going to 15 or 20,000 gold, it might go to 10 or 12,000. But still, there's going to be a connection to silver within that ratio. And with silver moving on its own metrics, you could have a situation, which I proposed, well, let's say gold is 10,000, which is not an unreasonable expectation over the next few years. And then what would that mean for silver? Well, silver, if it stays within the ratio of 40 to 70, you could still have a very, very high silver price. And I did the math on it. I don't have it in front of me right now, but you could have silver at 250, and I believe it would still be within a 40 to 1 gold ratio, just as it's historically been. and you could have a spike to 600, which would still keep it within about a 20-to-1 ratio. So we wouldn't have to have something where some people say gold and silver could equal each other, which I don't think they ever would. I mean, I think that's probably bizarre or absurd. But 15 or 20 as a spike is not, it's historically precedented, not unprecedented. And so that's why I think the case for silver, I think that if people do not capture as much of the coming bull run in silver as investors as they are entitled to, it's because their picture may not be big enough. And of course, many of the people that have a big picture or don't have any picture will stay too long and give it all back when the market finally declines. I think one of the reasons that 15-to-1 was prevalent for so long is because of the inability of people who mine silver for hundreds or even thousands of years to get it out of the ground in a way that we now are able to do through heap leaching and cyanide replacement and things like this. They can attack deposits that are maybe 50 or 100 or 150 grams per ton that are economically viable today, which they couldn't do many years ago. And they went after what you would call high grading, what was visible near the surface, what was before the invention of dynamite. You couldn't get down more than 50 or 60 feet. You'd run into the water table most of the time. And so a lot of the deposits that we mine today, you can de-water a mine, plus you have dynamite, and you go down and you work it that way. So we have all these ways to capture more silver that we didn't have then. So I would take something between the 15-to-1 and the 100-to-1 that we've seen. I know it went to 125 briefly, but let's say 50 to 100. And I think when all is said and done, that the new norm for silver, if the use cases play out like we've all been talking about with EV vehicles and all sorts of medicinal uses and whatnot, I think the new ratio could be 20 to 40 or 30 to 40 rather than 40 to 80. And I can't prove that, but I think a case can be made for it. At the very least, it will be a ratio that is more in favor of silver to gold than it has been in the last several decades.